The Qtec daily chart shows that the low for Friday 160.50 still avoided filling the gap at this high 160.22. So to the upside is this relative retracement up to, which will be resistance, as it's not even close to getting qualified nor confirmed. So if that gets qualified and confirmed, then it's a different story. Till then, resistance, however, closes below this trend factor down 1, and propulsion momentum down for 50% and 100% will qualify them for Monday with closes under those levels or both. And trend factor down 1 should be pretty good resistance unless it breaks down under it. And this chart line's long-term overbought up is still hanging over our heads up there, and that's right below the relative retracement disqualified up 3. And that relates to the ATM trigger down here. So it made it to the up level here. It was pressure up 102. And now it has turned into pressure down at 102. And that really means nothing unless this turns into a P alert. And the fast QQE has been sailing above overbought since the 29th when it made it above it. So for a couple of days, 3 days, it's been above 70. And the DMI plus is still pointed down, but the DMI minus is following suit and is pointed down slightly, and still light years gap between the two. And the ADX is still moving up at 40.25, so the upwards direction is still intact. And back to the ATM trigger, the fast trigger up is definitely stalling underneath the oversold line here in blue. So that needs to make a jump above that level and start heading up to join these two again. So if we get a move by the slow trigger down or the pressure down towards the downside and get below the overbought, there could be trouble if this still remains under the oversold line. And in the Qtec daily cloud chart, the qualified demand line gained qualified cancel status as it closed above that level there for that demand line. And the conversion line has been really good support for the Qtec, but break below that and it's down to the channel 3 low, the mid band of the Bollinger Band and the lower Stark Band, which are all climbing up. So those levels could be a lot higher in a few more days. And again, the bottom of the gap zone at this high 152.16 is the concern area, but there's a lot of support there as the top line of that channel that it broke out of is around 152 also. And the conversion line's companion, the baseline, is down there too, going sideways. 150.57, that would be a last ditch redoubt there. And I don't hear anybody talking about it, but the blue 100 simple moving average for the Qtec and the 50 simple moving average are about to have a crossover to the upside. So then the 50 will be above the 100, and I would say that's a buy signal too when that happens. However, I would wait for that to coincide with the possibility of getting the REI here for the daily Qtec under the oversold -40 for 5 days or less, and then head back up within that time frame, all the while having the DM1 sailing away up there. And the rock is a little concerning as it's getting close to its overbought line, but as long as it stays up there, it could just skim off of that and tick back up a little bit, and the REI will give the buy signal. That's in a perfect world. And the S&P 500 daily cloud chart shows the closing price for Friday is getting really close to the high over here on July 27th. So that's the goal, 4607.08. We just need a tick above that 07, and we'll print the D wave up wave 5 over here somewhere. And if that does happen, then the D wave up wave A will print somewhere in this area. Could be this low, 44.87.83. Could be this low, maybe this one, 45.10. So the A could print quickly, and that could coincide with the D wave down wave B printing along with the D wave up wave A. And then if it turns around and heads up in the perfect world, then the D wave up wave 5, wherever that prints, will shift over and replace the D wave up wave B. So the B might not even print. However, the D wave down wave B will print, so it will be on 5B. And then the D wave down wave C will print, and then we shoot back up and move onwards and upwards with more euphoria. And that would be the scenario for all the talking heads that are giving S&P 500 5,000 targets for the end of the year. So that would need to happen in the perfect world for that to happen up to 5,000. And that daily and weekly ongoing supply line that was in the same vicinity was pretty good resistance as I predicted. And the daily ongoing supply line for Monday will be at 4599.08. And the high here was 4599.39. So there's no wiggle room for a slight gap up above this high and then a close above it. So it will have to open above it at 4599.08 and close above it for it to become qualified. The only other way, it's a slim possibility, and I have not done the math, but there would need to be a low down here for Monday around 4,500 or so, and then turn around and head back up and close above it, and that will qualify it also. But it's more likely the first case scenario with an open above it for the start of the day on Monday and then a close at the end of the day. And there's plenty of room to move to the upside with the Bollinger Band at that level, along with the Channel 3 high, and right above those two is the upper Stark Band. So there's a nice area here to move above this ongoing supply line. And the weekly ongoing supply line level will be at 4498.75 for the week, so just slightly below the daily one at 4599.08. And in the S&P 500 weekly chart, the upper Stark Band level is at 4600.70, so that's bumping up right against where that weekly ongoing supply line is, 44.99 approximately. So plenty of resistance still around the 4600 area, and this qualified canceled demand line extension in brown is at 4642.87 for the week. And the megaphone cell 7 end count has printed in the S&P 500 daily and the Qtec daily, and it will print here in the S&P 500 weekly chart with a tick higher than this high, 4607.07. So to have all three megaphone cell 7 end counts printed is another indication to start lightening up a bit